Good morning, everyone, and welcome to the European crossover webinar. Bear with me, let me go and get something up. Wow, last couple of minutes flew by quickly. All of a sudden, I thought I had another couple more minutes. Let me pop up something real quick. There we go. Bear with me. So we're seeing a relatively quiet session overall, except Dalian is continuing to push up higher here right now, which I still have a short. So I think some of us do, which small position, but still not too thrilled with it. Although because of the impending U.S.-China trade deal, obviously you can see where that's going to have the bid. Now, that being said, S&P's interesting move because we're coming back, but we're off the highs. Remember, we run up to some key highs, and then we started sliding back. I was thinking, whoa, is this kind of one of those, in a sense, ahead of buy the rumor, sell the fact? We start to go and pair back, and it's going to be interesting to see. I think it's going to be key with the S&Ps if we can, at least right here, if we can get back above, realistically, would actually be right there, about 32.78. We shall see. Bear with me. But with the exception of dollar yen, it's relatively quiet overall. We are seeing cable under pressure. There was a talk of a potential rate cut. We'll see whether or not that transpires, and we'll actually get to that. We'll also take a look quickly as to what we have as far as data out for today. So let's pop into that. We just had Italian retail sales, which came in actually down 0.2, a little bit weaker here. Although the euro still hold up. Like right now, we're at 11.34 now, and I am looking, as I was saying from last week, I am looking for the euro to continue to go and improve here. So we shall go on and see. Let's see. At the bottom of the hour, UK business outlook, GDP estimate, industrial output. So quite a big figures, manufacturing output, construction output, all at the bottom of the hour here. So quite a few numbers here for UK. And then really nothing here in the States except we have employment trends at 10 a.m. Eastern. So relatively quiet session, but boy, is this session, look at that, completely loaded up with UK data with the exception of the Italian industrial sales and retail sales here. Let's go move this out of the way. And we'll just, and the news is even very light too, so we'll go on and get into that. Forex investors embedding Australian wildfires to hurt the currency. Foreign exchange investors are increasingly betting the bushfires, which have torched a swath of Australia the size of South Korea, will hurt the country's economy, and some are short selling the Australian dollar in anticipation it will fall. Hundreds of blazes are raging on the continent's east coast and have already killed 27 people, razed thousands of homes, and turned picturesque tourist towns to cinder and ash. On top of damage, bill will likely run to billions. Analysts expect sentiment, spending, and tourism, which accounts for over 3% of the economy, all to take a hit. That was in turn spurred the bets the crisis could push the Reserve Bank of Australia to cut interest rates to support already sluggish growth, which would be negative for the currency, since it tends to defer capital inflows. The fires are definitely an additional weight on the economy and should lower the barriers for the RBA rate cut. For Terrence Wu, he suggested short selling the Australian dollar as a trade idea in a note to clients on Thursday, targeting a fall to 67.28. The Aussie last traded at 68.75. Short sellers benefit from a fall in the currency by borrowing the currency. Well, we all know that. Recent price moves, notwithstanding a boost from better than expected retail sales data on Friday, suggests Wu is not alone in his bet. The currency had its worst weeks in September, shedding 1% against the greenback, even while other Asian currencies have risen. Shifts in interest rate futures pricing also shows an increase in bets on a cuts to rates when the RBA next meets on February the 4th. The fires certainly play a view that the RBA at the margin is going to be more inclined to cut rates than they otherwise might, said National Australia Bank's head of FX strategy, Ray Trill. It's certainly been a factor that's been reflected in money market pricing. And lastly, like I said, the news is relatively light. Let's grab the last one. So the imminent signing of a preliminary Sino-U.S. trade deal helped Asian currencies rally on Monday, but sterling fell on fresh hints of a Bank of England rate cut. The U.S.-China Phase 1 agreement, due to be signed at the White House on Wednesday, marks the first step toward ending a damaging 18-month trade dispute between the world's two largest economies. Both sides should produce a lot of positive headlines, really taking up the deal and talking up the deal and sounding positive about the outlook, said Westpac's Sean Callow. The more difficult question on trade can come later. I think for the week, the vibe on the trade side will be very positive, and that may help sentiment a bit. Relief that fears of conflict in the Middle East were fading despite ongoing tensions centered on Iran also helped sentiment, drawing investors from safe havens like gold and the yen. The trade exposed Chinese yuan, Australian dollar, each rose 0.3 to lead broad gains. The Chinese yuan, most attuned to Sino-U.S. trade developments, crossed the 6.9 per dollar to hit a fresh 5-month high of 689.59. The Aussie hit a 1-week high of 6919, and the New Zealand dollar also climbed to its strongest since Thursday at 66.50. Japanese yen weakened 1% to 109.60 for the dollar, close to a 7-month low, and it slid 0.6 to an 8th low against the trade-sensitive Korean won. Sterling slips. Elsewhere, the British pound fell 0.3 to 130.37, floated with a 2-week low after dovish comments from Bank of England policymaker Gertrude Vele over the weekend. Vieg told the Financial Times newspaper that he would vote for a cut in interest rates later this month, barring an imminent and significant improvement in growth data. Futures pricing pointed to implied probability of a rate cut. Are those hollow threats designed to try and curb the appreciation in the pound, or are they really going to try and follow through, said Chris Weston, head of research at Melbourne brokerage firm Pepperstone. The markets are saying on balance that they're hollow thoughts, but a rate cut is not out of the question. Elsewhere in the markets, the Taiwan dollar, well, we don't need to cover the Taiwan dollar. So let's go in and get started. And I'm just pulling up the bias chart. Bear with me. There we go. And start off with the euro. Well, post NFP, the euro held above the trend line and 1080. The pair needs a daily close above 1130. We're just right there. Here, you can see right here at 1130. To temporarily quell the bearish momentum. A close above 1170 would allow a retest of recent highs. Bears need a daily close below 1078 to spark a new round of selling, sending the pair that would send the pair to 950. So right now, key is going to be the 1130. Let's see here. Now, daily close is key right there, but right now, our resistance at the moment is going to be this 1142. I noted here in regards, and that was on Friday, the importance of the 1130. But right now, on a short-term basis, today it's going to be right there at 1142. So let's mark that off. But importantly, like I said, we need to get a daily close above 1132. On the downside, is going to be right there at 1102. At least, I mean, we're trading fairly tight range, but 1102. So keeping it fairly tight today. Okay, and on the cable bears have gained control of the market in the short term, although the overall tone remains bullish. Friday's close was the lowest over the last 10 days. Immediate support is 30.05, with a challenge of the pivot of 29.80 being eyed. Resistance is 31.30, with a daily close above needed to abate the momentum of the bears. Well, we opened lower to start the Asian session on the thought about, we covered that in the news story, but the potential for a rate cut. And certainly that's has the cable under pressure. And right now, they're eyeing, at this point, is going to be eyeing the pivot. Now, that being said, I think we probably potentially even get below the pivot moment. So the key is actually going to be right there, 29.40. 29.40. Let's take a look at on the 2 hour. I think we had a little bit closer there. Right there, 29.61. I'll call it 29.62. 29.62. So I think they probably gun some stops below the pivot. So it's gonna be 29.62. And on the upside, hard to see an upside here. It's got to be right there. If they do bounce up, they'll probably continue to try and sell into that, which would be 30.61. And it looks like the yen just popped right here. Okay, and the Aussie dollar successfully held the 68.48 after 3 days of testing. The pair found resistance at the 69.14 level. Going forward, resistance is going to be 69.42 with the daily close above, placing the bulls back in control. Support remains 68.48 with a close below that, sending the pair to 67.48. So for right now, it's going to be 69.42. You can see that right there. It's be 69.42. And already moved higher, so we'll probably adjust that just a bit higher here, which is going to be right there, which can be 68.70 for support. And let's go move into the Kiwi. Actually, you can pull this right there. So the Kiwi held the 66 cents level on Friday, retaining a strong bullish tone. The pair needs a daily close above 66.50 to offset the bears. Resistance comes in at 66.91 with a close above, allowing a move to 68 cents. Support comes in at 65.92, followed by 65.44, which is going to be the 38%. You can see that there. So we did climb just above 66.50. And as I said, you can see them pushing back a little bit because I said we do need a daily close above 66.50 to offset the bears. And we had a resistance of 66.91. Not too big of a move here, but you can see here that it's 66.50, so we're going to keep it. Wasn't much of an ad there, so we're going to go with let's just call it 66.58. And support. There's at 65.92, so we'll hold that there. And let's go and move on to dollar CAD. Dollar CAD traded in a rather tight range on Friday considering the jobs report, but managed to close above 30.29. Support comes in at 29.90 with a close below, reopening a move to the prior target of 29.02. Daily close resistance is 30.98 with intraday additional resistance at 31.13. So let's move this here. Still trading. I mean, we're trading, a super tight range at this point. We're going to go right there for right now. 30.27. And on the upside, it's going to be right there. I've actually had struggled a bit right there on that level. We're early there. We'll actually go right here. I mean, we're trading in a super tight range right now. 30.92. And let's go on and go to the peso. Okay, the dollar peso finished at new recent lows. The pair is on pace for a move to the existing target of 1865. Confluence with 1862, the 161% of 1902 to 1965. A break below opens a move to 1844. Resistance is 1892, followed by 1905. The bulls would need two consecutive daily closes above 1908 to negate the bearish move. So, I mean, we're looking like, I don't want to say it's a done deal, but you can see here, they want to go. We've had this, looking at this level actually for, I think, the last 2 weeks. And they've held up, but it looks like they certainly want to make a move towards that. So at this point, we're just going to go with that 1865 right here. And resistance 1888. And this pair can't seem to pick itself up no matter what. That's what it just seems like. One quick downside swoop to 1865 is where they just need to just jump to. Let's go moving now to the dollar yen. And you can see here we've broken above here at this level. Looking at it on the 30-minute chart, you can see here, you can see where we got this pop right here, and really a move above 967 opened the door for a move higher. And you can see we got that earlier right there on the half hour, broke and pointed for a move higher. So let's go on and jump back in. Here's the dollar yen. Dollar yen consecutively closed above 927, the pivot to end the prior week above the key level of 964. Below the key level of 964. The pair needs a daily close above 964 to allow a move to 1047 with a pause of 1007. Support is a pivot of 927 followed by 902. Well, obviously, we've pushed higher. The key is going to be if we can maintain, if we can get a close above 964, that opens the door for us to move higher. Now we're certainly above that, but where are we on the close? But certainly we're moving higher. And you can see here we have this marked up here. We're going to go and keep this here right there. That's just fine there. And on the downside, let's take a look on a 2-hour chart. Is going to be right there. $9.34. Let's go move it to the cash dollar index. The dollar index remained bid but failed on Friday to challenge the weekly pivot of 97.89. Intraday resistance to start the week will be 97.67. Support remains 97.13, followed by 96.80. A daily close below 97.13 shifts short-term momentum to the bears. So to start the week out, it's going to be 97.67. And here's going to be 97.13. Pushing just a little bit stronger here, but we have this downtrend line. And as I mentioned, 67 is going to be short-term resistance. You can see that coming across here. But the big pivot is the 89. With that, we'll move into the cross rates. So the Kiwi yen finished the week on its highs, providing bulls momentum to challenge resistance at 73.31, with additional resistance at 73.71. Support comes in at 72.27, followed by 71.79. A daily close below 71.79 places the bears in firm control with an expected move to 71 cents. So as we start out the week, resistance is going to be 70. We put for 73.31. Bear with me. Right there. That may be a bit of a stretch here. Let's go and take a look at a 2-hour. Although if you think about it, it hasn't added that much. Right there, 73.05. So it's going to be 73.05. And we mentioned support is 72.27. We're going to keep it a little bit tighter than that. It's going to be 72.52. And let's go on and move into the euro yen. There we go. So the euro yen finished the week on its highs. Intraday resistance is going to be 22 even, where we're actually above that as we hit the stops, followed by closing resistance at 22.34. So that'll be our resistance. Let's see how high we got up here. Looks like right there at 22.30. So it's going to be 22.34. A close above that should allow for a challenge of 23.50. Support is firm at 21.16. Obviously, a ways away from that, followed by 20.75. So let's take a look at where support is going to come in. You can see that coming in right there. That's going to be support right now. 21.32. 21.32. We've already had a pretty good run up here. Let's go and take a look at it on a 2-hour chart. Probably have to adjust that even higher. So there's support right there. 21.61. And you could almost make it a little bit hard, but right there. 21.69. 21.69 for support for euro yen. Okay, so the euro spent the week basing just above major support at 59.54. Let's take a look here. Okay, right there. So the dip in the euro odd may set up more of an, hold on, I don't know what happened to my Asian analysis on this. This is pretty nutty. And for some reason, it didn't save it. Hang on a moment. See if I have that listed. I don't know why I didn't save it. That's odd. Okay, and this is odd too because it looks like it didn't even save my my levels and everything. This is just a minor. But anyway, that being said, so we've seen the euro odd going and pair back a bit as we've seen a little bit of strength in the Aussie, but we're still, once again, like I said, in this area here, this basically called a range. We did come off last week off that 59.54, saw a nice rally, but right now the market is once again pairing back, losing its to a certain extent its momentum. You can see here support comes in right there at 60.92. We're just holding above that. We're just going to place this right now for key support coming in today. Right there at 60.62. And resistance, let's take a look at it on the 2-hour chart. Resistance is going to be right there, 61.33. Boy, this thing is trading in a tight range. 61.33. Now let's go move into the Euro Kiwi. The Euro Kiwi finished Friday in a quiet session. The pair needs a daily close above 68.42 to generate some short covering. Additional resistance would be 68.98. Support comes in at 66.94. Boy, is this thing trading in a tight range. With a daily close below 67, opening a test to 66.32. So this thing, man, we are trading in an exceptionally quiet range. Golly. So it's going to be 68.42 on the upside. That'll remain the same. And on the downside, $66.87. And still that seems a bit $67.22. And let's go move into the Aussie yen. The Aussie yen got a leg up on the with the close near the week's high, as well as above 75.50. You can see that there. The pair will look to challenge resistance at 76.19. Further resistance lays at 76.42. Support is going to be 74.73. Confluence with the trend line. Well, we did go on and close above that 75.50. You can see that there. And resistance is going to be 76.19. And support, we are on the bid right now. So right now, support's going to be right there at 75.20. And let's go move into the guppy. God, look at this thing. That thing is in such a tight range. Oh my goodness. The guppy finished the prior week with back-to-back tight daily ranges. A daily close above 43.95 allows new momentum to challenge 45.38. Support is going to be 42.24, followed by 41.55. A daily close below 41.55 sends a pair to 39.77. So right now support's going to be 42.24. We had already 42.23. Just leave it there. Boy, this thing is trading in a very tight range. And obviously with Sterling on the weaker side with this idea of a rate cut, resistance is going to come in right there. $43.10. And let's move into Sterling odd. Says Sterling odd finished the week on the lows, closing just below daily support level 89.32. The close allows bears to attempt to pull the market to 88 cents even. We're actually below 88 cents even. Initial support levels were 88.24 and 88.39, followed by the pivotal 87.90. Well, that's where we're at right now at 87.90. Bulls need a daily close above the resistance of 89.76. So we are right there. There's our key support, and you can see that's confluence. And we're just going to go and pull it off of the trend line right now for support, which is actually where they hit. So there's going to be the support level is 87.69. That's going to be our support, the support level on that trend line. And resistance, you can see here. We just tagged that trend line right there. Let's move into the 2-hour for resistance. $88.52. Now, I'm still going to retain the bullish mode because although on a short-term basis we are bearish, but we're still above this trend line. We got to close 2 consecutive closes below this trend line before you can straight up say, okay, it's bearish. You know, so although it certainly looks bearish, I mean, we pulled back, but once again, last 2 days, but we're holding above the trend line. So I'm going to go and keep it for bullish until we're able to move beyond that, if we do. Euro just paring back a bit here. And dollar yen continues to remain relatively strong. Look at the gold market. We are back below. I know some people that shorted it and got stung a bit on Friday as they got, we started goose some stops up here. But you can see here we've turned around a weekend here, so paring back on it. But when we look at this on a daily, we'd come right into this range right in here, right? Not range, but right there. See the prior top right there, 1540. We'd actually tagged that, and we popped up, and I guess people jumped in too quick to short it on Friday, and some of them got stopped out. And here we are turning and coming right back in. Crude oil remains under $60 after quite the reversal from last week. So we remain under $60. We'll see now. Overall, bigger support comes in right there. We just about tagged it anyway. 58.34. try to pull that up. And here on the SPOOS, this was interesting in the sense that on Friday we ended up pairing back, and here we are come back. But to me, right now is going to be key if we can get back above 32.78, or are they just going to start to fade this thing because of the expected news? Everybody thinks that we're going to go to a brand new high when they signed the phase one deal, but if we start to go and fade, because then once again everybody's expecting it, and when everybody's expecting the same thing to happen, generally you don't see that happen. So we'll see what happens if we start to go and pair back from that in of itself. So that's where we are for the day. As I said, the dollar yen making new highs here, and the euro bit under pressure, and we're seeing the cable, same thing, below that pivot of 29.80. We do have support at 29.62, and we'll see you in the chat room. Thanks for joining us here on the European Crossover webinar.